Thank you very much for being here at the World Economic Forum in cooperation with the CBN Forum. We are going to be talking about China's financial opening, and this is a full-packed audience. I'm sure that we're all very interested in this topic. The financial opening is a very important part of the policy agenda in China. Last year in the Davos Forum, President Xi talked about this. And this January, Minister Leung also talked about the importance of the financial opening and the agenda. And Mr. Yi of PBOC also explained in detail our steps of financial opening. And latest book is published on China's financial opening. So we are all talking about the major steps in China's financial opening. And this year, there's a lot of content on the agenda, and a lot has been implemented. And this is the case in the future, too. For example, the banking, the insurance, the securities, the bond market, on all fronts, we've got a lot of agenda items. And more specifically, we will not go into all the details, but very importantly, on the three principles of China's financial opening. Mr. Yi of PBOC talked about in his book I just mentioned. He said that it is in a link with the exchange rate and the internationalization of our RMB. And he also talked about our ability of management of risks of the financial opening. And he also mentions that stability is very important, and at the same time to promote economic development. And this will be the backdrop for our discussion today, and is also a framework for our discussion today. In the next an hour or so, we are going to approach this issue from different perspectives, and we also want to save some time for the interaction between the audience and the panelists. So we'll speed up the process. We have a very powerful panel today. We've got the Chief Executive Officer of China, JPMorgan Chase, Mr. Mark Leung, and on his left-hand side is Valdis Dombrovskis. He's the
Dialogue, Financial Stability and Financial Services and Capital Markets Union of the European Commission, Brussels. Welcome, Vice President. 那么在他的左手呢
And right next to him is
China Fundamental Equities of BlackRock， 是我们的 BlackRock 的朱越总，所以也非常感谢你加入我们。那么最后的一位。
Thank you very much for being here. And we, last but not least, have Mr. Liu Shijin, the Vice Chairman of the China Development Research Foundation. And he's also a member of the Monetary Policy Commission of the PBOC. Mr. Liu, shall we start from you? We just mentioned the backdrop of the China's financial opening up, and we also hope that financial market will support the development of the real economy and to solve some of the issues of the real economy. And at the same time, financial opening needs to be done step by step. So from a policy maker's perspective, how do you look at this issue of financial opening, the management of the financial market and its relations with the real economy? Now, if we put all these factors together, we'll see that it is very complicated to do policy making. How do you look at this issue? You mentioned a lot of topics that people are very interested in. The financial market, its ability to promote economic development, our ability to manage risks in the financial market. They're all very relevant. Now, when we talk about China's financial opening, we need to look at this issue from a fundamental perspective. Why are we doing financial opening? Are we doing this just for the sake of it? Or do we want to do financial opening because we want to solve some of the issues in China's economy? So I think this is it needs to be a problem-oriented approach when we look at China's financial opening. Now, when we do financial opening, we need to solve the glaring the issues in China's financial system. For example, on some fronts, the efficiency is not high enough. Or if you look at market access, the competition, there is room for improvement. For example, the contribution of the financial market of GDP is about 8%. And if you look at major financial powers like the US or the UK, the number is about 7%. So at this stage for China, the level of development can be further increased. Its share of the total economy is not high enough. Now, two statistics. If you look at all listed companies in its profits, if you break that down, the banks take about 50%. And there's a published data of the 2017 top 500 companies. Around 100 are Chinese companies, so 121. For these 121 companies, about 50% of the profits are done by the banks among the 121, which means that if you look at the banking system, the financial market, the market access on this issue, there might be issues. Now, can financial opening solve some of the issues in this regard? And also for medium and small-sized enterprises, it is very difficult. It is very expensive for them to do financing for themselves. And can China's financial opening up solve their problem in this regard, in their financing issue? And another example in China is that we're now doing innovation. We want to transform, upgrade our economy. So which parts can contribute to the Chinese economy's upgrading? For example, we want some technology-intensive enterprises on the higher end of the value chain. Are there any financial tools or forms in the financial market that can help us do this? Now, above are some of the examples that we can see in China's financial market. They are quite obvious. And is it possible that through opening up, the financial opening up, we can solve these issues? Thank you very much. Mr. Liu talked about possible ways with which we can promote our efficiency in innovation and industrial upgrading. And from this point of view, it is necessary and indispensable to do financial opening. So financial opening is in a broader framework. That it's its role why we are doing financial opening. With financial opening, we can do more market access to have more competition.
How do you think about the viewpoint from Mr. Liu? And how do you look at the maybe some good lessons and experiences that we can learn from Europe to make the financial sector a good supporter for the real economy, at the same time to encourage the competition, at the same time to have a fair level of the entry? So how do you think about that?
First of all, I would say that at the European Union, we welcome the recent commitments and announced reforms on Chinese market opening. We also welcome the fact that it's very broad-ranged market opening, covering different sectors, including banking, including insurance, including capital markets, payment services, credit ratings, other areas. So we certainly see it as a positive development, well, for European financial market participants, but also for Chinese economy, because that adds to the competition and has a potential to improve the conditions of market access for Chinese companies. So it will help to diversify financing sources of China's economy. As regards our experiences in the EU, it must be said that from the openness to the investment, actually EU is one of the most open major economies in terms of the market openness. It's an open and transparent process how foreign investors can access EU's market, including in the area of financial services. And we think that EU economy is benefiting substantially for this. What we are currently concentrating on is to diversify also the funding of EU's economy, which is traditionally dominated by bank lending, and we want to complement it by more financing from the capital markets, both in terms of equity and corporate bond markets. So we want capital markets to play a stronger role in financing EU's economy.
Yeah, and when we look at the European market, because the union as a whole, and we need a banking union, and at the same time we have the different countries, and different countries might have the different regulatory frameworks. Then they just included into the banking union. So because Governor Yi just mentioned that the opening up of the financial markets should be consistent with the regulatory capacity. So how do you think about the regulatory capacity's role here for us to be ready to the opening up for China? What kind of the suggestion do you have?
Well, on regulatory capacity, actually, I had a number of meetings yesterday in Beijing with Chinese authorities, among other things, to discuss exactly the questions of China's market opening, and it must be said that there is substantial and sufficient regulatory capacity on the Chinese side to regulate the market, and it also must be said that the European, or even more general, foreign market participation in Chinese financial sector is actually quite limited. So the bulk of the financial sector in China is still domestic. So in terms of the size and scale, it must be said that foreign participants represents a relatively small scale in Chinese market.
Yeah, thank you very much. And Mark, you have a very long experiences working with the JPMorgan. Also, JPMorgan has a lot of knowledge about how financial sector can support the real economy and do a lot of innovations. So just to follow the comment from Mr. Liu, so do you think how can financial sectors can support the real economy at the same time to encourage innovation? What is the experiences from the JPMorgan?
Thank you very much for the question. I think we, at JPMorgan, and Jamie would always said it, of course, we have a lot of clients to serve, but at the same time, we're fully committed to help the communities. And of course, we're very keen about our expansion plan in China, we'll talk a bit about later, but we also think it's our responsibility to fully participate in the growth of the economy, the financial systems, and more importantly, community on both sides.
Yeah. And Helen, what kind of comments from your side?
I think the opportunity is incredibly vast in terms of China's financial opening. Obviously, we have been engaging with many regulators on this front over time, and we have always felt that the regulators have been very committed to the financial opening and very open in terms of seeking feedback on how this could be done in a very productive and smooth manner. In terms of the structural issues, I think that there are many things that need to change over time to attract more capital into China. So for example, there has already been progress made in terms of index inclusion, in terms of Stock Connect, in terms of Bond Connect. But perhaps because of some of the cyclical issues, there's been market concerns about the renminbi, about, let's say, lack of maturity of the bond market because of implicit guarantees or immature rating agencies, et cetera. I think some of these structural issues are being worked on, and we have seen very meaningful progress already in the past couple of years. And it's difficult to say when the cyclical issues may all resolve, but once you have the structural framework in place, then we have a very good foundation for the foreign investment and interest to come in very, very rapid form once those structural issues are resolved. So I think it's a really good setup in terms of looking at the financial opening 3, 5, 10 years down the road.
Yeah. 刘老师，我们刚才呢是这
Mr. Liu, we just had a round of talking about how we look at what you said of the necessity of China's financial opening up. From your point of view, at the beginning of this year, there were a series of measures announced on financial opening. So up to now, how do you look at the speed of our work, the steps of our work? Is it too slow or too fast? How do you look at it? And how do we look at the remaining of this year? For China's financial opening this year, the steps are major ones, especially after President Xi's speech in Hainan. And if you look at the international community, it is highly regarded as one of the major events in China's financial opening up. Some of them are of milestone events significance. President Xi said very specifically in Hainan that we need to speed up on the things that are possible to be sped up. And some authorities are working on this in terms of implementation. And I believe there's very specific deployment on several fronts. Do you think, are there any areas that is not inconsistency with President Xi's speech? Well, in China, the imbalanced development is always there. So on different fronts, there are different issues. But I want to emphasize that for China's financial opening up, the direction is very clear. But you also mentioned that Mr. Yi of PBOC said the capital account opening up, how it is done we need to also take into account our ability to manage risks, to manage the financial system. So we still need to do this over time. This is one point. Another point is that there are, of course, concerns arising because of China's financial opening. Concerns, for example, will that have a negative impact on China's economy? Due to many reasons, for example, trade frictions, the exchange rate has been fluctuating. So if there's financial accounts opening up, how will it react to the fluctuation I just mentioned? Will that be major flow, capital flow? So this is, of course, the source of concern. But I think for China, it is a vast country with the #1 population in the world. In China, we've got different 30 different provincial level authorities, and among them, 20 of them have more than 10 million people, and 3 of them with more than 100 million people, with even more people. So this is a major economic power, even if you look at it from a perspective of a country. So if you isolate one, for example, out of China, if you look at it as a country, maybe if you place it elsewhere, there will be crisis or problems. For example, in the Asian financial crisis, in the past they had good economic growth, but with their opening up, if all their policies were not implemented properly, then the crisis came. Then there were major problems with their economy. But for China, it's not entirely the same case. In some provinces, there are some problems, but some other provinces, they are doing relatively well. For the northern eastern part of China, there might be some issues. But if you look at the Yangtze Delta, River Delta, and the Zhujiang River Delta, so they are doing actually very well. Do you mean that when we are doing financial opening, we need to use free trade zones, use the pilot cases to do financial opening, and we do not use we do not use the uniform form of opening up in all the cases in China? As I said, there's imbalances in China, so they're hedging against each other within China, which means that they have a very strong capability of absorbing the risks from outside. So this is quite different from smaller economies. So when China now is doing its financial opening, you talked about steps. We need to make proper, appropriate steps, sometimes big, sometimes small. And sometimes it is okay to make bigger steps because, as I said, we are able to absorb a lot of external risks. As I said, within China, different places can hedge against each other, which means that if we isolated one province out of China and we regard this as an economy, then there might be some problems already. But since they're a part of China's economy and all the places hedging against each other, overall China is okay. So you mean that we need to make appropriate steps, but sometimes bigger steps are okay. You also mentioned trade frictions. So when we're talking about China-U.S. trade, from that perspective, when China's doing financial opening, can China play a more positive role? And with financial opening, can it ease the frictions between China and the U.S. and then give result to positive results? This is fully discussed recently, and it is indeed a very complex issue. The trade frictions does not have a huge direct impact on China's economy.
However, right now it may have an impact on people's expectations. For instance, recently we can see the performance of the stock market, and meanwhile there's also some changes in the currency market. So I think the market overreacted. I think this is natural for the market overreaction, and sometimes there might be. However, recently we emphasized one point, that is, in case of the trade war, we still need to do our things well in China. So my basic point is, from the perspective of reform and opening up, China still needs to establish a high-level opening up landscape. So we need to speed up, right? Yes, we should not stop our efforts to reform and opening up. And sometimes the directions might be wrong. However, this is a test for us. We still need to stick to our direction, and we should never stop. And domestically, we need to establish a high-level market economy. So this is why we started this reform, and for the sake of time, we will come back to you later. So Helen, Mark.
You were just talking about the markets fluctuations in the equity markets and also in the currency market. So the same question for you. Do you think the market is overreacted to the trade friction? How can we accommodate the trade frictions with the United States, and how can China be ready to do that? Mark? Yeah.
Look, I think, first of all, markets always has tendency to move more when uncertainty comes, right? And investors' sentiment is a very, Helen would know very well, on the asset management side, is a very critical element to which I think for China, we need to develop a better approach in terms of helping investors gain that confidence over time. And it really also relies on a lot of infrastructural improvements the markets could do, as Helen alluded to earlier, right? The composition of value investing, etc. But yeah, I think I would love to hear Helen's thought, but I think we have multiple ideas that we have been working closely with as industry bodies or individually, also closely with regulators about advocating how to looking at what we have learned from our global experiences and apply here.
Yeah, so despite of the trade frictions, we should continue to the financial opening up, just as the Mr. Liu talked about. So how do you think the China's opening up will have the impact on the China's financial markets, and what kind of opportunities will this opening up for the foreign financial institutions like the JPMorgan or also like BlackRock?
If I can take that question, right? So it's really, and I would echo earlier speaker Mr. Liu's thought, right? The opening of the Chinese financial markets in the last 18 months has been transformational. It's unprecedented. If you look at the force we put in investing into putting up the right operation to serve our clients. And ultimately, we at JPMorgan, all our developments we do is for our clients. The footprint they go, the needs they have, we need to serve them on a global, holistic basis. It's already become a case that we think is a critical piece of our ability to have a complementary approach to serving our clients globally, to have a good China strategy and have the right strength on the ground. So many of the things we have done, for instance, the regulators have done, we fully participated in. The widening of the bandwidth in stock market, for instance, in the Hong Kong Shanghai and Hong Kong Shenzhen exchange, the quadrupling of those bandwidth really helps to at least have an impact on the Asia inclusion into the MSCI. We are fully anticipated, but we also want to have, hopefully see more of that measures coming through. I think we're eagerly awaiting the London Shanghai Connect, which hopefully will be by end of the year. Yep. So working with both fronts of regulators and investors and corporates to see what we can do to help that agenda. So you have multiple agenda on bond markets as well. And of course, commodities market in futures. We are heavy participants in the Shanghai oil futures contract on both a clearing and execution angle. And to the point you mentioned earlier, with our global investors and also corporates needs, it's actually a very important, significant development for the onshore commodities markets to allow us to help our global corporates access that market. So, and I think last but not least, right, of course, is the lifting of the shareholding limits structures for securities licenses, asset management company, as well as futures company.
Yeah, and by the way, we know that JPMorgan is applying for a license of the security company from the CSRC. Do you think that the trade frictions will hamper the process of this applying of the license?
Look, it's not within our control in terms of the sentimental element of the trade friction, but we have a strong long-term commitment seeing the future of China's significance to us and our clients. We're committed to this. And to be fair, we're working constructively with both regulators, and I think we are in due course completing our application. So,
Helen, please.
Look, I completely agree with what Professor Liu said earlier. Obviously, I think it's not a surprise that sentiment will be affected by the trade uncertainties that seem to have escalated over the past months. And indeed, in a capital market, for example, the A-share market, which is very retail dominated, it tends to be the case that the market, overshoots both on the pessimistic side as well as both on the positive side when things are good. So right now, I would say sentiment is very, very low, probably getting, approaching kind of the 2015 type of level. What does that do in terms of affecting how financial opening and financial reforms happen? I think it's got positive as well as negative implications. And in terms of the negative, obviously some of the previous agendas in terms of, let's say, accelerating the pace of unicorn or CDR IPOs in the A-share market might be on pause for the moment because the market is very worried about the equity supply. Perhaps some aspects of capital account opening may need to take a pause. But I think we have to think back to Governor Zhou's comments back in 2015 at the height of the FX fluctuation, when he basically said that we have to see where the window is open and really seize that opportunity and not really bang your head against the places where, maybe for the moment the window is closed. So I think, as Mark mentioned earlier as well, this is actually the good opportunity to do other types of reforms that may not be necessarily affected by the trade war sentiment, or maybe in some ways, in 2015, for example, some of the illegitimate capital outflow was actually more closely inspected and regulated, whereas the more legitimate opening up of capital inflow into China was accelerated. So I think these are the opportunities or the turning points where I think the financial opening can pick and choose. The road is going in a certain direction, that's for sure. There's not going to be any kind of reversal But nonetheless, the road isn't a completely linear one from beginning to end. And therefore, in between, on different types of issues, there's going to be bends and turns and pauses. And I think that's where we can pick and choose at which points and on what issues we advance the financial account opening.
Yeah, thank you very much, Helen. So you talk about the valuations very low and the sentiment is very low. Now some windows are closed, but still for the market itself, do you think when the valuation is so low, is this the right time for the foreign investors to coming in?
I think foreign investment interest in the A-share market has been driven by two things. One is the structural positioning, and two is the cyclical opportunity. Yeah. I think the structural positioning is going to be one directional in terms of index inclusion going up, in terms of, obviously people looking for opportunities in the A-share market that are not necessarily available elsewhere. On a cyclical perspective, I think the positioning varies depending on what people think about the economy, depending on what people think about the opportunity set that's in this market specifically. We have seen actually, despite the fact that the southbound stock connect has dwindled and somewhat dried up over the past months, that actually the northbound stock connect continues to be fairly active and foreign capital continues to come into China. I think that's probably largely because of the structural demands at the moment. We do see increasing interest in the A-share market as an investment destination, as a firm. Even if people have some concerns about the renminbi, they realize that most foreign institutions are underweight the China market historically, and therefore, even to kind of move, let's say, maintain that weighting as the index inclusion goes up, whether it's in terms of equities or in terms of bond indices, there has to be more participation over time. So I would say that foreign interest is still quite high, and a lot of foreign, particularly institutional investors, have a slightly longer time horizon versus domestic retail investors, and therefore are willing to participate in the market at a relatively low point of sentiment and valuation in search of medium to longer term returns.
Yeah, so in terms of the longer term perspective, how do you think about the trade friction and even trade war with the United States? When will this end in the long term view?
Well, I don't think any of us here have the secrets of Trump's Twitter feed, so I can't promise you when the trade frictions are going to end. But I think over the medium to longer term, for sure, what we have seen is a heating up of the U.S. economy, and certainly if tariffs were to go to, let's say, 25% on the $200 billion by the end of this year, that will work into more inflationary pressures on the U.S. and probably more damage to U.S. consumers in 2019. So I do think that there is increasing incentive for both sides to increasingly attempt to work out something, probably in the coming months. Whether that's before the midterms, after the midterms, remains to be seen. But I do think that the trade deficit is purely or largely a negotiating tool as the U.S. looks to push for more strategic issues, like, for example, better access for services and goods to be sold in China, et cetera. So perhaps at the end of the day, the compromises will be more on the strategic side, and we can get some relief in terms of the cyclical or trade deficit issues.
Yeah, but in 2019 and 2020, do you foresee a kind of just a big stop of the economic growth in the United States because the end of the cycle, and also a lot of the stimulus package now in terms of the fiscal issues? So some economists and some investors are foreseeing kind of a stop of the a very quick stop of the growth, and also some kind of collapse of the United States financial equity markets. Do you agree with them or not? Very quickly.
I would say that's certainly the consensus view, and that's certainly the view that's permeated the market recently. And that's why we have seen a meaningful rotation towards safe harbor assets and defensives, et cetera. Whether that actually plays out, I think, is not necessarily the case. Firstly, I think if the trade war issues start to move towards some kind of cyclical resolution, at least, or a temporary compromise, if not permanent resolution, I think that will be, as Professor Liu mentioned, hugely positive in terms of sentiment, consumer confidence, and all these cyclical equity risk premium types of issues. And secondly, I think we have been doing some proprietary tracking within BlackRock Investment Institute in terms of the global economy, what economists are forecasting now versus what we see from our big data and other types of tools. And we are still tracking at a slightly more positive growth momentum for the global economy versus what's forecast by consensus at the moment. So should the trade issues not worsen, we do see some room for positive and upside surprises. And I think for China specifically, as Professor Liu mentioned, irrespective of the trade issues, China needs to accelerate the pace of economic reform, SOE reform, all sorts of structural issues domestically. And if that can be accelerated because of the trade-related pressures, that's actually going to be an incremental positive tailwind for the Chinese economy as well going into the next couple of years.
Thank you very much. And very quickly for the future of the trade friction and trade war, so maybe JPMorgan can play a very important role there because maybe Jamie Dimon can participate in the running of the president of the next term. What do you think?
Tough question, Yanqing. I would defer it back to my boss, and I think but the one thing I want to say about him, he's a very, very strong leader. Not only well respected as a leader within the bank, but he has a lot of relationship in the business cycle, and as you know, he's the chairman of the U.S. Business Roundtable, contributing strongly as a think tank to work on what are the particular pro-business policy application that the roundtable should do. One thing you also may know that he also writes frequently in our shareholders letter every year to talk about what the particular regulatory reforms that may potentially benefit the community. And you know, in U.S. and actually globally as well, we have multiple lines of businesses besides corporate investment bank, wealth management, but consumer and commercial banking. We look to hopefully have a much bigger footprint here. But when you look at our overall full-scale operation when it's deployed, we put a lot of capital into lending to the community, a lot of efforts into helping corporates go offshore, onshore, and I think given where we are globally, we feel very convicted that to the earlier themes you mentioned, to bring the full force of JPMorgan here so that we can help the community. And it's exactly in line with all the themes today.
Yeah, thank you. Before we open the floor for the audience to join us for the discussion, and may I ask a Vice President, we know that China and United States have a kind of the trade war, and EU and United States also trade frictions and also some negotiations for the zero tariff and the zero allowed of the package, like of the TTIP, but a different type of the framework. So what is your suggestions for China to cope with the trade friction with the United States in terms of the lessons and also the experiences you have when you just negotiating with the United States?
Well, on those trade frictions and trade conflicts which we are currently having, indeed we are observing this also with concern from the European Union side. Even though we managed to avoid further escalation following the meeting between President Trump and President of European Commission, Mr. Juncker, it was agreed to avoid further escalation, and we set up a negotiating group to discuss potentially further trade liberalization, but indeed the scale and scope is substantially more limited than it used to be with TTIP or Transatlantic Trade and Investment Partnership. But I would say in current circumstances it's already positive that we are actually sitting at the table at negotiating. And something we would like to emphasize, and I think we broadly share this approach also with China, is that we need to preserve a multilateral rules-based system, and if there are trade disputes, we need to deal with them in a framework of WTO, World Trade Organization, so to avoid that kind of unilateral moves which we are currently seeing. And also, just to comment a little bit, this impact on the economic development. We do not see the strong impact of economic development in Europe right now. We expect economic growth in Europe being in a range of 2.0, 2.1% this year and next. And actually, we expect all 28 EU member states having positive economic growth. But we already see that this uncertainty affects confidence indicators, which then potentially can affect investment decisions, consumption decisions. So we certainly see this as a downward risk for the economy.
And also, in terms of the experiences from EU, do you think that now when China are coping with the trade frictions with the United States, how do you think that China should do in terms of the tariff level? Should we lower the tariff even lower and maybe to zero? And also in the IPR issue, because it's a concern from the United States and also concern from Europe. So what kind of suggestion do you have?
Well, once again, to the extent possible, and that's approach we have in the EU, we should rely on international organizations which are dedicated to deal with those issues. So normally we should try to solve and bring trade disputes to WTO. And to give example, you mentioned intellectual property rights. You mentioned, or it's also concerns, for example, with forced technology transfers. Yes, we are also at the EU level have certain concerns about China. That's why we joined a US action within the WTO in this area as a third party.
But do you think
so we are not escalating it unilaterally? Yeah.
In terms of the IPR issue, do you think that the TRIPS in the WTO will solve everything, or maybe China should work more to have or maybe WTO should work more to finish or cope with the IPR issue?
Of course, we know that we are also currently discussing WTO reform and different modalities, both in terms of governance, in terms of enforcement. And here, if we talk about intellectual property rights, I would say it's also primarily the issue of enforcement which we need to deal with.
Okay, enforcement is very important. Now it's time for us to open the floor for the questions. And I think that we can have time for 1 or 2 questions. And if you have a question, just raise your hands and identify who you are. And also, please be brave. Any questions? Oh, very good. We still have, please. I think that we have more time for the panelists to discuss.
谢谢 IHS Market 周波谢谢各位嘉宾的分享。
Thank you very much for your sharing. Financial opening are two-directional and win-win. I have a question for Ms. For the Chinese financial markets, enterprises, can they play a more important role? For Mr. Leung, from the successful experience of JPMorgan, do you have any suggestions for Chinese counterparts in the next 5 years? What do they do? What do we do to make ourselves more competitive in the international arena?
I think, in fact, we have been working very closely with a lot of big Chinese banks on multiple projects. So as you probably may know, we have an MOU working with ICBC closely, working on helping on our clients jointly how to take them offshore and how to collaborate. And we also have multiple projects with other banks. I think the key thing to note is we did, to your point, learn a lot through our various regulatory framework globally on how to exercise, for instance, control, client onboarding, AML, to system technology operations. And some of the points I didn't allude to earlier when I was preparing was, of course, we just are on the 10 years mark of the global financial crisis. And US is at the forefront of it. And of course, we and our colleagues in other banks survived through the crisis, having gone through a lot of robustness in installing risk-based capital, in treating liquidity, which is the core reasons for how companies can really run into issues, and how to install various regulatory safeguards, right, such as resolution, like a living will, to which how companies can wind down on itself. So we have learned a lot through those experiences, and we're very active advocates of, one, to regulators how things may change, but also share many of those experiences to our Chinese colleagues and the bank side to share ideas and how to build businesses together to help clients.
Yeah, thank you very much. Any more questions? Yeah, please, the lady here. 等一下话筒。
We're waiting for the mic. Beijing Shijin newspaper. I have a question for Mr. Liu. You mentioned that China's opening up can solve many issues. For example, the expensive and difficult financing, as you mentioned. Can you talk in detail on this issue? Thank you. It's a very broad question, I assume. For the difficult and expensive financing for small and medium-sized enterprises, I don't think this is specific to China. This is a global issue. It's more about the medium and small businesses. The reason I mentioned it is that I think there's a possibility for China through financial opening will be able to learn the experience and the best practice from our international counterparts or friends. For example, I understand in the US, for example, community banks, they have localized information, sufficient information in the local area. So with that, they will be able to detect the hidden value of the enterprises, as well as to understand the risks of the enterprises. So this is something we can learn from. For China, there are some certain attempts of endeavor. For example, I went to Taizhou some time ago. Their banks, non-state-owned banks, they're doing very well. They are now using new technologies. They don't only look at their reports, but they look at the equipment, even the human resources, the human capital in enterprises, to check the health of enterprises. So they've got specific localized ways to make their judgment, and they've got very low bad loan ratio. So for China, there are also new ways of doing things. The reason I brought this up at the beginning of the session is that through opening up, we can learn a lot from the US, for example, and the European countries, also developed countries and developing countries. What do they do? What have they been doing in terms of solving the issue of difficult or expensive financing? And some of the best practices in China, we can also share with other people, so that we can together solve this common universal issue. That is, for small and medium-sized enterprises, it is very difficult to do financing. And also, fintech plays a very important role. Yes, indeed.
Yes, I think fintech can really play a major role in the future.
Oh, yeah, maybe the final one, be brief. 我们最后请这位先生非常简短的。
So, very brief question, please. Thank you. I'm from the Reuters. I want to. You talked about the structural reform, and I wonder whether you can do something in terms of the monetary policy. Could you do more things? Could you introduce more initiatives to spur the economic growth? Because trade war will have a very negative impact on the economy. So do you think the monetary policy is loose enough? A monetary policy is something that we care about, and the central bank has its existing policies. Right now, the statement is we need to provide an ample or reasonable and ample sufficient monetary supply. So monetary policy need to be reasonably loosened in order to introduce enough liquidity. So you cannot be too tense or too loose. We need to be reasonable. So aside from this statement, I think your question is very relevant. At present, if we don't consider the trade war factor, I think China's economy will still go down. Overall, China's economy is now shifting gear from over 10% growth to median growth rate. So it's only natural for China to slow down its economic growth. And we talked about reduced leverage rate. or cutting down the leverage? Please pay attention to the time. Okay, I'll be brief. So, in times of downward pressure, and the monetary policy need to respond to the market situation. The monetary policy should not be too loosened, and we should not stop our efforts to reduce leverage. So do you think this is the right time and also the right situation right now? So the current level of the monetary policy is very appropriate. I think we've done a good job. I think it's better for President Yi of Central Bank to answer this question. So I want every one of you to make a prediction. Right now, foreign institutions in the stock market, banking market, in many markets of China, the foreign institutions is relatively lightweight. For example, 1% in the banking sector, and I think a larger percentage in other market and segment. So overall, I think the foreign institution is still a relatively small player in China's market. So with such opening up, by 2030, what will be the share or percentage of the foreign players in China market? Will it be 10% or 20%?
Helen and I were debating about this, right? So we discussed about, is it a couple percent, 2% plus minuses of foreign shares ownership in the domestic bond and stock market, which are huge, gigantic, right? Top 3 in the world. If you look at the other big markets, the average foreign ownership is easily in the teens. So my aspiration for our businesses across and for our clients, and of course, Helen is one of my primary clients, so I would just say, I would wish that we can participate in the market in a much deeper fashion. And if we get to those levels, it would really be a great opening of the Chinese financial markets to Professor Liu said. So I would wish we can get to that stage at 2030.
Yeah. Vice President, the share or maybe European share in the Chinese financial market?
Well, indeed, as you already mentioned, actually, the share of foreign financial institutions in the market is quite limited. You mentioned around 1 or 1.2% as regards, for example, banking sector. And actually, during the last decade, that share has been going down. So I think the first thing now on the market opening would be to reverse this trend, to see that the share of foreign banking institutions actually starts to raise. And for this, I would say implementation of the reform commitments will be key. We see, I would say, very positive reform agenda, very broad-based reform agenda, as we discussed. But what will matter now is the practical implementation, also from the practical market participants' point of view, whether they really see obstacles being removed, different kind of obstacles, administrative obstacles, among other things, and whether new obstacles are not emerging. And then I would not go now for numerical targets, but then we should be seeing this trend reversing and the share of foreign financial institutions in China's market starting to grow.
Yeah, thank you. Helen, final word.
I think it's going to really vary depending on which aspect you're talking about. You know, as Mark and I were discussing before this, I mean, even if you look at the A-share market today, we're kind of already approaching mid-single digit. That's just for the foreign ownership of the equities here, and that's not even including, for example, the potential if we're going to include foreign asset managers and so on and so forth participating more as the foreign ownership limits lift. So I think for some of these areas, we have potential to reach as high as, high teens to 20%. But some other areas that are already fairly mature and deeply well ingrained, let's say just traditional bank lending, for example, then I would guess that by 2030, probably the percentage is a little bit lower.
Yeah, thank you. 刘老师，您最后做总结。
因为我不是这个金融业的这个。
Because I'm not a financial expert, so it's hard for me to tell the exact percentage. So what's your feeling overall? I think it should be higher than right now. But how high will it be? I think only market can answer this question because there is still a lot of uncertainties. If you have to have to say a certain percentage. This is disrespectful to the market. I think history will tell, and the market will tell. So in case of more market competition, the asset cost will go down. And I think what is most important is not the percentage, but still it will be higher than right now. It will be much higher than what is right now. We are a little bit over time, but thank you very much for your participation. A big hand